Welcome to the Pirls Stock Market Commentary video featuring the proprietary bull bear point and figure market breadth summary chart for October 16th, 2016. Market breadth. With this past week's market decline, our bull bear point and figure ratio at 1.12 fell from 1.36 last week, remaining within bullish territory. The total count of securities in bullish or bearish patterns decreased 4% to 2,985. The count of bearish stocks increased 7%, while the count of stocks in bullish patterns decreased 12%. The Pirls P&F Market Breadth Summary Chart shows us a market now 16 consecutive weeks in bullish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. To subscribe to the email weekly version of the Pirls Stock Market Commentary free of charge, simply enter your email address in the space provided and click Subscribe. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 187 points for the 10th decline in 11 weeks. At a positive 112.26 points, it has now fallen below the November 2014 and March 2015 tops and continues now below all 5 tops above plus 100, as well as continuing above all 6 bottoms below minus 100 in the last 3 years. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in neither accumulation nor distribution mode, with average daily volume lower than the prior week. In the last 2 weeks, the Nasdaq had 3 accumulation days and 1 distribution day. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week also, the Nasdaq ended in neither accumulation nor distribution mode on lower average daily volume. Momentum, now at minus 125.65 from a positive 40.70 a week ago. A valid Woody's CCI zero-line reject long entry pattern begun at Tuesday 9/27 close, ended Friday 10/7 close when the CCI 20 daily fell below the zero-line reject pivot point. The result of this trade simulation was a gain of 5.73 points on the Nasdaq, or 43 cents per share of QQQ. The CCI 20 daily now has 4 consecutive days below zero. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 24 weeks ago, while the daily CCI 20 began a Woody's uptrend 13 weeks ago. The CCI 20 weekly has fallen to a positive 60.78 from a positive 88.76 last week, continuing outside the plus or minus 50 range for a new zero-line reject long entry signal. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and all of the bottom 5 are negative. Summary: oil services, banks, and brokers on top. Gold and silver and some tech on the bottom. Bullish, KBW Bank and brokers continue in the top 5. Oil has left the top 5. REITs has left the bottom 5. Bearish, oil services continues in the top 5. Computer hardware, disk drives, and networkers have entered the bottom 5. Semis has left the top 5. Focus this week from www.zerohedge.com. The world's most bearish hedge fund reveals its next big short, by Tyler Durden, summarizing the strategy of Shannon McConaughey's of Horseman Global, dubbed, quote, the world's most bearish hedge fund, end quote. Some key points are the following from analysis of Russell Clark, CIO of Horseman. In its latest October letter to clients, the fund reveals what it believes may be just one example of the latter, having taken its exposure in the sector to a massive negative 20%, and what, if true, could be the next big short idea. So, how do you pick a sector or strategy that is at the top of the cycle? Perhaps the best sign of all is a fund that has grown assets rapidly. In the US, I find funds that have reached 20 billion in AUM from 5 billion in AUM within 1 or 2 years are typically great places to look. Japan-based US REIT funds, these funds look particularly egregious to me. Furthermore, they are raising assets even though US REITs in yen terms have gone nowhere in the last few years. I find this an exciting area to short, and we have taken this sector to 20% of the fund this month. The generation of 21-year-olds entering the workforce is the first to have grown up in a broad state of deflation. While Horseman is clearly bearish on Japan, however, its biggest net short exposure remains in the US, where it has a nearly minus 40% net position. Thank you for watching this week's Santu Pirls Stock Market Commentary video featuring the proprietary bull-bear point and figure market breadth summary chart compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you have enjoyed a peaceful and pleasant weekend, that you are looking forward to a prosperous and productive week coming up, and wishing you true success.